Hi, everyone. Happy New Year. Thanks so much for joining us here for another edition of Royal LePage Binder Live. This is our live stream where we talk to you about what's happening in the real estate market here in Windsor and Essex County. My name is Arms Bumanlag, and I'm joined by my friend, Mr. Frank Binder, who is our broker and owner of Royal LePage Binder Real Estate. Happy New Year to you, sir.
Thank you very much, and to you too as well, Arms. Appreciate it.
Uh, yeah, we've got lots of ground to cover as always, my friend, including, not only looking back at the last month in real estate in Windsor, Essex in December, but we also wanted to dive into taking a look at years gone by in real estate and comparing those numbers to what could be some fantastic insight for our viewers and listeners here on the stream too. But as we usually start, Frank, we talk about some of the numbers coming out from WeCar for last month too, for year in and year out. And this is a pretty good snapshot, I think, of what last month held for the real estate market here in Windsor, Essex.
Yeah, absolutely, and it's great to see. Again, we're going to talk about this several times, but there's great balance in it. Certainly, there's. I was involved with the Windsor Star interview, and we talked about the price. The price for the 1 month was substantially higher, but the average sale price has been really good. It's kind of held its own throughout the year. We're showing that balance again. So here you go. Let's just dive into that. You'll notice that the average sale price, and I have to remind everybody that the average sale price that we put forward in these graphs are strictly based on an annualized rate. It's not a monthly rate; it's an annualized rate. So the effect of, for example, in this December, the average sale price for houses sold in December was 575 plus. But that doesn't mean that our prices for houses generally have gone up to 575 on the average, because it's only 1 month. That's the effect that you're seeing right now. So you saw the average from last month to this month was only affected by roughly about a $2,000 increase in price, even though the house prices in the month of December jumped substantially. So those are the things that we have to keep in context as we talk about these averages. I never like to quote a monthly rate. I always like to quote an annualized rate. And that's what you're seeing in the graph here. Still very good. Still equity gains for most people who've owned houses, and that's a nice thing to see.
And that's a big thing too to talk about, right, Frank? In terms of some of the equity for homeowners, I mean, homeowners continue to do well to see that value in their homes continue to rise.
Yeah. Well, yeah, particularly if you own them. So if you own a house, I mean, you're doing that, and your equity increases. I mean, I'm watching even, I bought a house about 3-4 years ago now. And the difference in price between then and now is substantial. And I think most people who have done that have been in the market for a little while have seen that. And it's, we're realtors. As realtors, it's not just numbers. We see it every day. And so we're used to it to some degree, but for people who have been out of the market, it's sometimes quite amazing to see the changes in values. I mean, I have these dialogues almost on a daily basis as we see things change, and we'll talk about that later, particularly in the condo market, which is we don't talk about in terms of how the prices change there, but it's pretty dramatic there as well.
Also, too, if you take a look at this graph too, Frank, the units sold by price range, it's pretty dramatic here in terms of the over and under, right?
Yeah, exactly. Now, basically, the over and under on that graph may be a little bit wrong. Sorry to tell you that. The average price is under 500,000 is 228 for the month, and the average over 500,000 is 267. Not sure why that graph is showing those numbers, but they're clearly not the numbers for December. So, anyways, just want to let you know that it doesn't make any difference. The key for us is that the upper market, what you want to the takeaway from that graph is that the upper market is outselling the lower market. And as that barometer keeps moving up, that 500,000, your median is now 550. As we keep moving that barometer up, there's going to be lesser and lesser houses selling underneath it, more than likely, because the average is moving up. So we've got to keep that in mind, and it's not going to become uncommon. But you'll notice that when we talk about that, the highest price range, or the biggest price range in December, was in that 500 to 549,999 bracket, or 5 to 550 price range, and that's where most of the houses sold. And that's just indicative of what our market is. That's where you see the demand and the supply meeting each other, kind of in the middle, and that's basically what we're seeing. We're seeing a lot of trading going on in that 450 to 600 price range, and that's excellent. That bodes well for our market generally.
And there's another, monthly graph that we take a look at too, just before we go into some of those historical trends here too. The units listed in December compared from 2020 to 2021.
Yeah, and basically, yeah. I mean, again, I'm not sure what happened to these graphs, but the residential listings in December 2021 is 459. Last year, the year before would have been 415. So I'm not sure why those graphs are that way, but that doesn't make any difference. The important thing is that we get the right numbers to the audience, and the right numbers are 459 this December compared to 415 last year, really mimicking the same thing. Actually, a better month, and I can only tell you that December likely is really weather related. We've had a very mild December. We have more activity continuing to go along in December when you look at the month, and that was probably one of the reasons why it was a stronger month. Another reason for December being a stronger month is the fact of supply, and we want to talk about this a little bit because we haven't really talked about that in the past. When you look at what your month could be or is, we haven't really looked at the supply side. So at the very end of November, all right, you had 570 homes available that were on the market ready to sell. So when you go back through the stats, you'll see a list to sale ratio of 113%. Well, how was that arrived? I mean, you only could sell the listings that you take, right? Well, not if you've got a listing inventory. So remember, when you take these 459 houses that were listed in December, you're already adding that to this listing stock at the end of November, which was 570. So you had a lot of listings to pick from. All right. So I can still show a lot of houses. So as long as I can see houses, buyers want to look at them. And that's really what happened. So what we saw in December was a very, very good December, a very strong December. Outdid last December. And basically one of the reasons for that is because there was listing stock. At the very end of the year, we ended up with 293 available homes going into January. And that's really, really important. When I talk to my other brokers around the region in Ontario, mm-hmm. They're complaining most of the time, Arms, about not having stock. They have no listing stock, nothing to sell. And, we're talking large cities where you've had 100 or maybe 150 listings available to sell. And that is not the case here. We have a lot of houses available. And if you look at the listing trends over the last couple of months, the listing trends are basically saying, hey, we've had increases of listings both in November, increases of listings in December. So basically the listings coming in are keeping up with demand. And that's really important for us to note that, because that's great for our market. We're getting that kind of balanced approach where we're getting people putting things on the market and people looking at the stuff and buying it. They're not short of it. And that's basically this time of year, usually, especially in January, February, very little listing stock is on the market. Very few people putting on the market. You'll see a drop more than likely in January. But the bottom line is that fortunately we still have properties on the market, and they haven't removed them from the market. And one of the reasons for that is because of the weather. The weather's been good, so people will look. People can look at it. Now, we're not sure what the lockdown will do to that, sure, in terms of what people will do. But quite frankly, so far earlier this year, there is great demand. We're seeing multiple offers and stuff. So this is continuing to go in that trend.
You talk about trends from year in and year out, Frank. One of the things we wanted to dive in here would be to look back at the years previous here in Windsor, Essex too. And, you were mentioning that you had purchased a home a few years back too. And if you even go back many moons ago, so to speak, to years gone by, this particular graph in terms of the residential market, I think really paints a really interesting picture. It's almost like peaks and valleys, and then this huge jump towards the end here with the historic sales price.
And look at where the jump is, right? So, I mean, if you look at the two last, if you go back to 2018, 2019, it's really, you didn't see much of an increase, but look at the difference between 2019 where the line would be there, and 2021. I mean, it's incredible, really. I mean, you haven't you have nowhere in that 10-year graph do you see that kind of a jump, and that's just what we've had in the last little while. So, even as realtors, we're trying to wrap our heads as to why that is the case. Obviously, we're certainly not where we are today. We're getting a lot of new builds going on, all that type of thing that was not happening earlier on. So it's quite substantial for us to see the difference. I mean, you're looking at, if I look at back at 2019, you're looking at what, 250, 270 as being the price. We weren't even at 300,000, and now we're at 550. So it's quite amazing to see what's happened just in the last couple of years. It's very, very graphic here in terms of that's why we wanted to show you the graph, is just to see what it was, so the public can get a good impression of what's been going on.
And that also includes, Frank, too, right? The listing versus sales price too, which we wanted to highlight here. And this also tells a very interesting story if you look at the last little bit.
Yeah, I mean, this is just a graph for just basically a year, and what do you see there in the green? The green just shows you what the asking prices are, and what the blue. This is on all sales. So basically all. I mean, on a house by house basis, that may not be the case, but look at it. It's pretty consistent. You're just getting over the asking price consistently all the way through. Now, let's keep in mind, most realtors are using a pricing strategy now where I'm listing below what I think the property is going to sell at. Why? To get more multiple offers for a seller. So I understand that. So we have to take that into account. That green is obviously going to be lower more than likely, but look at the consistency between the two. I mean, this graph shows consistency, that we're continuing to get multiple offers, we're continuing to get higher prices than what the list price is. And it's obviously a seller's market. There's no question about it. Sellers are been the benefactors of a seller's market, and it continues to be a seller's market at 75%. So I mean, we saw that dip earlier into 60% range, 66% range, but now it's back up to 75. So it's still a very strong seller's market. Mm-hmm. But in a sense, it's almost predictable. I guess that's the word I wanted to show you in this graph, is that it's very predictable, which is good because we can get used to the fact that this is what's going to happen, and we can kind of be able to tell that to our clients. And that's really very important for realtors generally, to be able to assist their clients in saying, hey, this is where you're going to end up in terms of the sale price.
What's interesting too, Frank, is to take a look at even the last year for the average days on market for residential as well. I mean, this is an interesting graph because, again, a lot of peaks, and there's a bit of a valley here too.
Yeah. Well, look at what happens generally is that the days on market, which is your green line there, the blue line is a median thing, so it's always going to be more flattened out. But the green really shows what happens during the year. So what happens is that your spring market, which starts in April, beginning in March and April, look what happens in March. It just makes a big drop. Why? Because now I'm getting all these houses on the market, and I'm selling them, and I'm selling them very, very quickly. So basically what happens is that you're going to have less days on the market. It starts to climb back into the summer. You hit the beginning of September, and what happens? Our fall market kicks back in, and it goes down. Then it goes right back up. You see the arrow going right back up to where it originated. Why? Because it's December, January. Market slowing down in December and January. Not as many houses sold. Still strong market. Don't get me wrong, but not as many houses sold. So you see that graph shooting right back up again. And then when we repeat the exercise, you're going to start from that level and come back down again into the spring market again. That's typically the flow, the ebb and flow of a real estate market. And you're seeing that what happened in the last year.
In your experience, Frank, is that somewhat, I don't want to say expected, but certainly predictable in terms of, a bit of a slowdown in months like December too? We were saying, I think before we went on air, that December is sort of a half month for a lot of folks, right?
Yeah, exactly. Listen, we are a people business. I mean, we sell houses. No question. That's a product. I know, I understand that, but we sell houses to people. So let's understand what happens. Why does the days on market go up during the summer? Well, usually I have summer vacations, so I'm taking time with my family, and we have less people looking for houses. I'm not going to sell as many houses when the people are taking vacations, going away, doing that stuff. Now, granted, this is a pandemic, but people are still trying to be as normal as possible. In the wintertime, nothing happens at Christmas time, right? Everybody's going to take the time off. The kids are back home. We're not out there looking at houses. We're enjoying our families. We're doing those things. So what you're going to have is, you've got to remember, this is all about families. It's really all about households. And we've got to understand that this is how households operate. So we know that these are the ebbs and flows of how it operates. And it really is about people and how they operate. So when people disappear for time, which is deserving, they deserve the time off. And that's exactly what happens. It's reflected in our market automatically, whether or not. I mean, weather always may extend it a bit. So we might have an extension in December where it's not quite a half a month. It might be a little bit longer going into a half month as we had this year. Why? Because the weather was good. So the weather could be extended, so we'll get more people still looking at it. And then the cold hits, and then we don't want to, not as many people want to go and look. And fortunately, we don't have a lot of snow. We're not like absolutely locked in with snow and everything else in inclement weather. So in that sense of the word, we have less of that in our particular region. Other regions, I mean, let's face it, the snow hits, I could be down for a week. So that's exactly what happens. People aren't going to get out there looking at houses, and that it's weather related. Great deal of what we do, and we have to just take that into consideration.
Something that is interesting, and people are getting out there and taking a look at the condo market too. And this is something I know we've been talking about for the last couple of months. And we wanted to show the audience this as well. I mean, the list for sold price for the last year here for condos here within the region.
Yeah. And you know what? It's kind of interesting. We haven't looked at the condo market really, really closely. But when I was fairly startled at the condo market, because look at what's happening in here. You don't have as much consistency in pricing, right? So you're going to see a number of months where the sale price was very close to the list price. You don't have a lot of these things necessarily being intentionally underpriced to get multiple offers, but they are definitely outselling the list price almost consistently. Not quite. There's a few months that they're almost equal, but for the most part, that's happening in the condo market. Which is when we're talking condo market, we're talking condominium apartments here. So basically, it's kind of interesting that you're being able to achieve these kinds of levels and it's mimicking, really, for all intents and purposes, the residential market to some degree. The key for us is that let's understand the condo market. Usually, the condo market, apartment market, is a retirement market or a first-time buyer market. So that it replicates, really, in a sense, those particular segments of our market, and we're still seeing that kind of pattern where it's where sale prices are outselling list prices for sure, and that's a good thing for condominiums. It's good to see that they're getting the uptick in the value of their condos as well as those who are in their houses. There's no part of our market where that's not happening at the moment.
And then the average days on market too, Frank.
Yeah.
You take a look at this. There's a big drop. I mean, my God, around the summertime, huge.
All the way for June. It just keeps going down and down and down. Well, because what you've got is a lot of people putting their properties on the market, and they're selling quickly. It just takes a nosedive all the way down to June. And then you've got, that same thing as we talked about in the summer. It starts to edge up because there's few of them on the market necessarily, or they've left the market for a while. And then you see it going back down again, right? It follows the trend exactly. What don't you see, though? The big difference between here, you don't see that spike in November, okay? You see where it just kind of followed the median average. It stayed right below there. So, I mean, the condo market's been very, very good. And we're going to get into another graph, and I can explain to you why. It's kind of interesting that we haven't really focused on it a lot, but those condominium owners are doing well in terms of selling their condominiums at a price now. That's pretty impressive.
Would you say that the demand for the condos is because of the housing supply,
Yeah.
I guess, factor, or is it the fact that folks maybe want that type of lifestyle, or is it a combination of a lot of things, Frank?
Well, it's a combination of all kinds of things. But you know what? What happens with your pricing? So it's always a pricing thing. We look at Toronto. This has been going on for 15 years in Toronto. Anybody trying to buy anything in Toronto to start out with, you don't start in a house most of the time. You just can't afford to go to a house right off the bat. You're generally buying a condo. So anybody who's a single buyer or just starting out with a family, they're going to a condo most of the time in Toronto. They're trying to find something because it's just a fact. It's a fact of life. Why? Because I would have to pay back then $400,000 for a condo, and I could afford that. I just couldn't afford the $600,000 house. Now, fast forward to today, I can't afford the $900,000 house, so I buy the $600,000 condo, and that's what's going on in Toronto right now. As we move that price point up, as our average goes up, and we get into this issue of affordability, what happens here? The same thing. People are going to move to the condo market. Why? Because I can afford it. First of all, as a first-time buyer, I'm going to look at that as an option more and more often. And as a retiree, that I'm going to do the same thing. If I wanted to go to a semi-detached as a retiree now, more than likely, I'm going to have to spend more money for that semi-detached home than my existing detached home. And that's just a fact of life here. So the bottom line, what's my alternative if I want to, hey, I've got my nest egg in my house, I want to sell it out. What am I going to go to keep some of that? Well, I'm going to go to a condo apartment. That's exactly what it is. If I'm quite prepared to live in a condo apartment and it's fine for me, I want to lock the key and go sell for 3 or 4 months of the year. That's what I'll do, and that's a choice that people are making, and they're making more and more of that choice as we go along. And that's why you see in the condo market all these buildings. All of a sudden, I've saw articles in the paper. There's another big one going on Lausanne Road. We've got 4 other buildings going up there. Why are we seeing all this building of all these condo apartments? Because there's demand. The demand is there. I mean, there's no question that the demand for condo apartments are there. And one more thing is, as we said before, rents have gone up. So our rental market has gone up in terms of the cost of renting substantially over the last little while. That means that even I, as a condo developer, can rent the condo apartment out if I can't sell it. That mitigates my potential losses or risk, if you will, in putting up a building. So in that particular case, that's why we're getting all kinds of condo development at the moment, because there's less risk, not no risk, but less risk, right? When I can either sell it or rent it. But almost all the condos that we have going up, they get reservations to almost 100% these days. And usually they would only ask for 50% to start, but many of these things are sold out before they even start digging in the soil. So, you've seen them on Banwell, 3 big buildings went up. You've seen them all over. I mean, there isn't any small town, even right now, that doesn't have some kind of condo development going on, and plenty on the books as well. I want to tell you that. I mean, you just saw the Windsor Star, the large building on Ferret has on Lausanne, and right across the street you've got another 4 buildings slated to go up there. So, that's just a small microcosm of what we're talking about here. We've got a lot of them going all over the place. All right. And even yesterday's announcement there in Walkerville, it continues to go. And is that a good sign? Yes, it is. It's basically, let's understand it. Supply is the biggest issue to pricing in our area. If we've got supply in a new build as opposed to existing homes, we just don't have enough existing homes. So that's a good thing. We want supply, and that's really, really important for us to have that. Okay, so I think our cities are doing a good job at getting those things on the market. Obviously, there's some incentives there in some of those areas that we need to allude to. The fact that there are incentives to put these things up, those are also helping to do that. And I think government's going to have to continue to do that going forward, particularly with brownfields, taking areas that need to be repurposed and that kind of thing. Much like the Walkerville Distillery project that's going on, those types of things. You've got to get people, government involved in those situations where they're going to designate those areas and repurpose buildings for residential occupancy.
And that leads us to something too. When all these buildings are going up, these condos are going up, hopefully new builds are going up. You talk about that migration factor, right? You're seeing a
Mm-hmm.
lot, I think,
Yeah.
people moving from those major metropolitan centers are
Yeah.
getting some cases priced out, and then they see Windsor for a certain
Yeah.
point, Frank, and then they're like, okay, let's get down there. Or in some cases, some folks maybe might be moving from Windsor somewhere else.
I mean, listen, this is not just this migration thing we're talking about is not Ontario or anything. This is really nationally, and it's also in the U.S. I'll give you a typical example. I'm just watching. I was reading an article where in San Francisco they've lost 18. We're talking about employable people. 18% or 18.9% of their employment has moved out of San Francisco. Chicago, 12%. Well, where are they going? They're going to Texas. They're going down to South Carolina. They're going to Florida. These are areas where they're more affordable. Even Californians are now migrating out of California to the next states around them. They're going to Arizona. They're going to Colorado. This is typical migration. We see that in big centers where they're just getting out of the urban center because they become totally unaffordable for them, and they move away. Same thing's going to happen in Toronto. Same things are going to happen in Vancouver, so on and so forth. We will continue to see that. Now, I should tell you that is slowing down somewhat, right? So basically, you're going to see a lot of migration, and it was exacerbated by the pandemic. Suddenly, I'm working from home. My home doesn't work for me working from home. I've got to go. I've got to figure out what to do with it. So that was exacerbated by the pandemic. They had to make decisions. So we saw a greater degree of that type of thing going on. But that migration will likely slow down going forward because most of the people made those decisions, those pandemic decisions, if you want to call it that, or related to the pandemic. They made those decisions and they've already acted on those, and they're not likely going to act on them anymore. Will we continue to see migration? Yes. Maybe not exactly at the same levels that we've experienced over the last 2 years.
Frank, in your opinion, I wanted to get your take on, you talk about the real estate market, but we also want to have our ear to the ground, or I guess to the winds, for some headwinds, things coming down the pipe that we should be aware of too, right?
Yep. I want to finish up my conversation with the condos, if I can just circle back there.
Sure.
Okay.
Yeah.
So the condo market, I don't know if you've got the graph, but there was a graph that we had with a condo market showing the sales prices, but the actual sale price of the average sale price of a condo isn't far behind that of a house. It's gone from, and this is what I'm saying, is that the condo market in the last year alone has gone up substantially greater than the houses, and that was what was startling to me, and I wanted to make sure that I brought that up. So there's almost a 60% or 66% increase in condos in the condo market in terms of what the pricing was on the condos. So that is quite amazing to me, the fact that that's gone up from almost it was about 300,000 starting in the year. It's now 500,000, approaching 500,000. So in the space of just that short period of time, the condo market has adjusted by almost 66%. And a lot of that has to do with new builds, quite frankly. So when I bring a project on, what we find in the condo market, or for any market, if I'm putting houses up and the prices of houses are going up, it in fact pulls up existing homes. So what happens is that's not different than the condo market. If my condo apartment was trading in around 300,000, and now new condos are being built and offered for 450, it pulls up the existing stock to some extent. So all the new building that we're seeing going on and the pricing there on is pulling up the existing stock. Why? Because that's kind of, in a sense, reevaluating the existing stock. Because if I've got something that's comparable, there will be a gap between the new and the existing, but that gap will get narrowed over time. And that's what we're seeing happening now. We see all these new condos coming in the market with brand new pricing, and sellers going, wait a minute, they can sell that for that amount of money. I've got this, and I've got a few extra things in here. Why shouldn't I get more money for mine? Because I've renovated it, I've done all the insides. It looks just as immaculate as a brand new one, really. So you see what I'm saying? So what happens is that it does pull up the value of condos, and you've seen that happen over the last little while as well. Sorry for circling back, but I
No,
want
that's okay. It totally makes sense, right? To
going
see,
back to the headwinds. Yes, there are
yeah,
headwinds for sure. All you need to do is go to a grocery store, try buying stuff. All right, you're going to see food inflation, and we're seeing a lot of that. We're seeing inflation at the gas pumps. We're seeing it all over the place. Inflation is an enemy, definitely an enemy of ours. What happens with it, inflation, is that the banks need to react to it and try to level it out, and that means maybe higher interest rates. Higher interest rates come, that it's going to be a drag on the housing community for sure. So we'll see where that comes. They're predicting it. Actually, it was the prediction that that's likely going to happen. That's, I think, drove people into the market because they're trying to get the low rates on their mortgages right now,
sure.
while they're still available. And I can understand that. But as we speak, the government's also working on what? I don't want you to borrow money from a HELOC, for example, to buy and renovate houses and speculate on housing and so on and so forth. So, I mean, the government's already moving on that side of the coin. They're also talking about making it much more difficult for you to mortgage or borrow money. Might have to come in with a greater down payment to buy that secondary house, or whatever else the case, whatever the thing. So expect to see government intervention on that front, and so what you'll see is that you'll see that part of the market maybe being affected by external forces in the not too distant future. So do we have headwinds? Yes, we do. We definitely have things that might come up. So that's why Royal LePage, I'll give a plug out to Mr. Soper. Mr. Soper was giving a talk, and he's talking about nationally, we're likely expected to be in that double-digit range, maybe 10 to 12% in terms of an increase in price in homes, but not to expect to see 34% or 36% in going forward. And I'm along the same lines. I don't think that we'll achieve those kind of levels, but we should still have a robust market. I'm just hoping that it stays balanced the way we've seen it. That's great for our economy, great for our city and for our county. To see that type of thing happen. So if it stays that way, we'll be very fortunate and have enough houses to support those who want to buy them, and condos as well. So it looks good from my perspective. It looks very good going forward.
And it reads well as well. I had a chance to read your article in the Windsor Star, and it was fantastic. So that link is up on our screen, and I'll put it in the comments for folks to take a look at Mr. Binder's quotes with the Windsor Star in regards to the market over the last little bit. So, Frank, it's always a pleasure. Thank you so much for your time,
Always
sir.
a
I
pleasure.
appreciate it.
Thank you. Best to you, and most prosperous New Year.
Absolutely. Frank Binder, our owner operator and our broker of record for Royal LePage Binder Real Estate. Some great insight from Frank in regards to what you can expect going forward and the last month, and some really interesting stats and numbers in regards to the last year and beyond for the Windsor-Essex County real estate market. So you can check out the website, royallepagebinder.com, for all details and to secure yourself a local agent. If you're looking to buy and sell, you can find a list of folks here in Windsor-Essex that can help you out. We'll see you next month here with another update on what you can expect in the market and breaking down those numbers to make sense for you on our market update for Royal LePage Binder Real Estate. Thanks for watching.